Hello everyone, this is Teddy Keckstaff from Forex Trading Unlocked, and we are here on Wednesday, May 26, 2021 for a Forex market analysis for you. We are going to cover all the major currency crosses, and we'll address any of the other ones if any of the people on our chat would like to talk about them. So before we get into the whole mix of things, we want to show our disclaimer to remind you that this video is for illustrative and educational purposes only. And if you have not done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, and our Twitch channel, Forex Trading Unlocked. And also check out the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. So with that, let's get to our live action screen here. We have the forex-trading-unlocked.com website pulled up. From the nav bar, we've already clicked on the workstation page. We're going to go down and skip past the numbers. There are some good numbers coming out. We have oil numbers coming out this in another less than an hour, actually half an hour, and some other economic numbers to close out the week also that will be impacting the interest rate market and the currency market. We'll see how they swing. The dollar index has been getting beaten up a lot lately, so especially with pressing new lows again yesterday. We're almost near the low of 2021. Is this the continuation of a bearish trend that will continue to manifest itself throughout the rest of the second quarter and maintain its bearish posture, or are we getting ready for a rounded out bottom? Right now, as you can see, the Euro US dollar, it tried to make a higher move high after yesterday. It was positive on the day earlier, and now it is slightly lower. Now, I would use caution with these markets right now. We are heading into a holiday market. You have the Memorial Day weekend in the U.S. As you can see, the past week especially, you've had basically a range between $1.2159 and $1.2246. So it's not even a dollar range, where once we did break out and made a higher move high, as you can see, the market's consolidating and really trying to stay bullish, but it's really not pushing any major momentum to higher levels. We did take out the high from the end of February, and as you can see, as we finally poked through it, not that much of a deal. Now, one of the things you want to definitely key off of is the fact that gold is up and interest rates, bonds are up, and 10-year is up. So that means interest rates are going down slightly. So that is negative for the dollar currently right now. And I think that a lot of the pressure that you're seeing in the US dollar, especially versus many of the major crosses, is due to the strength in the gold market and the fact that the interest rate market has bounced, meaning the interest rates are rallying, and in the actual market, meaning interest rates are going slightly lower. There have been some interesting numbers that have come out in the real estate sectors as of the last week or so, as far as mortgages and home sales and things like that. And the funny thing is that everyone's comparing numbers now to last year, which is normal to compare to a prior year. However, last year was unlike any year in human history. So it's more likely that you would get a better view of strength or weakness in the markets if you compare to 2019, not 2020. So right now we're beating all kinds of expectations and looking better on a year-end basis over last year, but I don't know, unless your memory is that short. Last year at this time, the pandemic was just beginning to unwind, and we were starting to feel the true blunt force of the shutdowns. So to overcome those numbers is not such a big deal. All right, so what do we have going on here? We have the euro, like I said, kind of stagnating right now. So as far as where we're looking for a breakout or what have you, this is the next major target up here. We're looking at $1.2352 as a target. If we could breach this level, that would mean that we really are serious about this bull for the euro US dollar. You got to remember, as a whole, the dollar had capped out right at the beginning of 2021, has been in a downturn the euro rather has been in a downturn up until the beginning of April, and now it is continued to trend higher. So the markets go out like they come in, and if you look at this, if we put a vertical line here and separate it, we can see that we have a very symmetrical pattern here. So this is key. Should we not get above $1.2352, well then maybe what we're doing is establishing the range for this market. So if we take this and then we come down to about here, then this $1.18 to $1.23 zone, as you can see, the majority of trading has happened within this band. Any excessive rally to the upside, the only way I can see the Euro US dollar really maintaining this bullish posture and holding above $1.2352 would be if we have, for instance, a major sell-off in oil. Also, we would need a big rally in the 30-year and 10-year interest rate markets, meaning interest rates going down, and then also we would also probably need to see a big sell-off in oil and also many of the other parts of the CRB. Now, the CRB is the Commodity Research Bureau Index. That itself is up over 20% just in 2021 alone. This provides inflation. Now, these are numbers that are going to start to really impact the direction for all of the currencies. So as we head into like the oil numbers today and a couple other numbers as we head towards unemployment next week, be very mindful of these because the dollar will start to swing off of these numbers. So right now we have a lot of things that are not supporting the dollar, they're bearish the dollar. And a lot of these things are good things. The question is, will these numbers remain? So right now we are not looking for any major move until after the holiday markets. I would say be cautious because of thin volume. Once again, we need to get above this $1.2352 to really confirm any true bullish momentum. Otherwise, I mean, right now we've been making higher move highs and higher move lows. That is indicative of a bullish trend. However, that doesn't mean that we are going to maintain this posture here. So let's see, we got this low here. Now the slope isn't that extreme, so it's very easy to maintain this by attrition. As you can see, by next week we will start to buffer up against this upward sloping support and come through it. Is that bearish? No. The key that we really need to do is, since we've been making higher move highs and higher move lows, is we need to take out this low from last week and definitely take out this low here. Should we get below this low here to $1.2052, then I could see us sustaining a bigger correction down towards this 118 area. Now, this is a holiday week that we're coming into, so I'm just giving you from experience, be cautious with these markets. If you're already in a trade, work it, keep it tight, and I would really shun entering any new trades anytime after today into Friday, just because U.S. markets will be closed on Monday. Global markets will be skittish and thin because of that, but they will be flowing. So you could have some vacuum moves if there is some excitement that always may occur over any weekend to stir the markets. You will be caught with your pants down, basically. So you don't want that to happen. I would be mindful of these levels. Let's see, so far we don't have any questions on the chat, so let's just double check here. Do we have any questions on the chat? No, we do not on Twitch. Okay, so let's see. Alright, so let's go on to our next market then. So we have the Euro US dollar. Now let's go on to the British pound. Oops, GBPUSD. Alright, British pound US dollar. This one here is inching along. This is another reason why it's hard to be too bearish the dollar, because as this one grinds higher, it just doesn't seem to want to maintain a bullish posture. Now, I would say that oil has a big influence on this market right now, since it is kind of stalling. Should we see a rally in oil, you should probably expect to see another challenge of this $42.38 area. As a whole, I have the pound targeting $44.20 to the upside, but that's going to be a grind. I would say that if we get a major rally in gold, or excuse me, in oil rather, then this would help to perpetuate the bullish move or higher move highs. Outside of that, I would be very cautious trying to sell into this market. It is a bull market. It's been making higher move highs and higher move lows. However, if we can take out this support level here around $1.40 even, then I would say we have a good chance of coming back towards this $1.39, $1.38 area. To manifest a move such as this, I think you're going to need to have a sell-off in oil and even a sell-off in gold, as well as a big slide in the interest rate markets, meaning higher rates. Are these things possible of happening? Absolutely. So, but I would use caution right now. The trend is your friend. This market is in limbo. It is a range trader's delight. As you can see, especially from the last 3 sessions, even though we tried to poke outside higher move highs or lower move lows on a daily basis, not much was able to manifest. And look at how the closes are. The openings and closes are very, very tight. And even today's trading, you got to realize European markets are coming to a close. U.S. markets have just opened. This is very, very tight for the British pound. When this starts to happen, be aware, because when you see how this here, sideways, 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 explosive move to the upside, the same can happen to the downside. It's kind of like when you're churning and burning here, and watch out for the head fake. This is something where we may see a significant little sell-off on one day, and then boom, turn around, and then we have a major rally. And the same could happen to the upside. We may just barely pierce this $1.4238, and then have a very, very big correction, taking out this low at $1.40 even. So now I would say that you're probably not going to see this volatility until after this week, so into next Tuesday. US dollar Swiss, do not try and catch a falling knife. This continues to erode. Right now you can see that the dollar is getting a little bit of strength because it is up versus the euro, the pound, and the Swiss. So the dollar index is getting a little relief. I would say that's more likely attributed to profit taking. So now this one is trending. As you can see though, it's a grind. It's really, really tough. Range traders are doing well. I think that the only way you're really going to get any real true rally is you need to breach this 90.52 area, taking out this high, and then that sets us up for a challenge of 91.66 in this area. I am not expecting anything really beyond that. The only thing I could see that would manifest a rally such as this would be if we start to see, for instance, a big sell-off in the interest rates markets, meaning higher rates, which would give strength to the dollar, especially versus the Swiss. And then also if we see a sell-off in gold. But right now with gold pressing higher move highs, with oil flirting with an upside breakout, and with the interest rates pretty much in limbo but yet correcting to the upside, that is probably what is helping to maintain excuse me, this bearish posture for the US dollar Swiss. So as far as downside targets, we have this 88 area in the longer run. As far as maintaining the trend, we are making lower move lows and lower move highs, swinging lower constantly and grinding this trade lower. Is it going to round out and start to get a correction to the upside? Maybe, but I would use caution. As you can see, most of these days you're selling into highs and buying into lows. The range traders are making money and the trend traders are getting chopped up. Whether you're shorting it or buying it, you're taking on a lot of heat for not much reward. And that's a situation where no matter what, whenever you're trading, you want to have at least a 2-to-1 reward to risk ratio. If you're not, then you're not being very successful, because the law of large numbers are going to kill you as you trade over time. So without having those types of potential trades to manifest right now, I would say use caution and stay away. Remember that it's one of the keys to success in trading is knowing when to trade and when not to trade. And the biggest thing is, like, you only trade when you have your signals and you know your targets, your risk, you implement them, and you stay like a robot, no subjectivity. So, and right now we're heading into a market where without subjectivity, you won't be pulling the trigger. So if you want to pull the trigger, that is jonesing like a gambler. You don't want to do that. Remember, trading is a business, treat it as such, and right now the business is slow, so don't try and push it. So with the Swiss, once again, we are a bear. looking to grind higher, lower lows, and once again, only if we get above 90.52 do we see any type of rally. Now, the US dollar JPY, here's another reason why I think you need to listen to me. See how these ranges have been very, very tight, very sideways trade for the US dollar yen. This is winding its coil. Now, it's been making higher move highs and higher move lows, but on a very minuscule basis, and then settling back into its holding pattern. Now, let's put a little range here, and let's go down to here. So if you look at this, basically, ever since the middle of March, this market has been in a holding pattern. Could this be a head and shoulders, with this being a shoulder, this the head, and then this being the second shoulder? It's very possible. I would kind of key off of this support line here. Now, you can see by attrition, we've already drifted through this, but we didn't make a lower move low. We made a higher move low. So we're going to use this low there, and then definitely this low here as our critical support. Anything below this $7.46 area, that would be a negative indication. It would target this 106 down to 105 half area. The only thing I could see that would precipitate a break such as that would be a tremendous sell-off in oil, and then also a big sell-off in gold, as well as a sell-off in the, a rally in the Treasury bond market. So do I see those really happening on a big scale? No. But should we have one of those things, I think then you could precipitate a break. Now, should we get a big rally in oil and a big slide in interest rates and a sell-off in gold, then I think what you're going to see is we'll see a challenge of resistance once again. Overall, if the dollar is getting beaten down, the yen is one where you can find strength, and I think that's why it's in this holding pattern right here. Odds are more likely that we will challenge this 109.718 area, taking out this high right here at around 109.81, or excuse me, 109.71, and then above here we will be challenging the highs that were set back at the end of March. Now, this is a big deal. This little ladder here, if we can breach 109.81, we'll be pressing 110.98, basically 111 in no time. We have a longer term upside target of $1.1370 up to $1.14.50. Very likely that we can reach those levels over the next month and a half to 2 months as we wind down the second quarter and head in the third quarter. Typically, summertime markets can become very shallow and thin. Are we expecting that this summer? Probably not. It's very unlikely that that will be the situation. So now what we could do is should we see any major policy that, especially in the U.S. towards oil, that would be favorable, then I would say that you could see a tremendous slide in this market and breakdown. But unless you see that happening, which I don't believe that's going to happen right now, I have a target of $75 before we hit $100 a barrel for the oil market. And if those projections are actually solid and viable, then I think that you are going to be hard-pressed to see any sell-off in the U.S. dollar yen. So now here is where we get things really tough. And if you look at the Australian dollar, U.S. dollar, this is a range trader's delight. We've been calling for range trading for the past couple months. It is not trying to break out. Today we had a little lift. It fell apart. This one is a tough trade. I would really say that you got to wait for a signal. I mean, it is a neutral to higher bull in a very weak sense, but we don't have any expectations for any radical moves. So I would, for this one, it's a hands off and wait for a new trend to emerge. The New Zealand dollar, US dollar today made a big breakout to the upside to finally cap out higher move highs after a higher move low. But as you can see, it's just hanging there, and now it's settling back into this range. I don't expect much follow through with this one either. And as we've been talking about for weeks, this one is just hands off until we have a real signal and trend, reason to see a trend happen. Remember, the reason you trade currencies is because they trend. When they're not trending and they're choppy, stay away. That's not usual behavior. Okay. Now for the US dollar Canada, look at this. We have a little bounce. This is kind of crazy. Do we have a buy signal happening? No, not really. But we are trying to round out a bottom. And I think that this is because oil's had a tough time at the $65 a barrel level, trying to break out to the upside or sell off, and neither has it been able to accomplish. What I would look to key off of is this $1.22 even 02 area. Should we get above here, we should probably manifest a correction back up to the 123.5 to 124 even area, kind of buffering up where this last low was. Expectations for this market, the trend is your friend. This thing has been a bear for over a year, really hard pressing the dollar. We would need a significant sell-off in oil. Also, geopolitically, our relationships with Canada have been on the slide for the past couple months. That's a surprise in itself. That's another reason why I think US dollar Canada is hard pressed. With gold rallying the way it is, it's really just going to be really hard to see the US dollar Canada have anything more than an upside correction to sell. I do believe that the bear trend will maintain its posture unless we get a radical sell-off in gold, a radical sell-off in oil, and a big rally in the interest rate market, which I do not see any of those manifesting on a major scale anytime soon. So with that being said, I would look for rallies to sell more than breaks to buy. If you tried to buy this market for any longer period of time over the past year and a half, you've been getting crushed. So until this gives you a reason to be bullish, even for a correction, I would say the trend is your friend. Keep a bearish posture and look to sell rallies. So we don't have any questions on the chats on Twitch and we have a couple of comments here, but nothing to chat about. So let's go back to the euro US dollar. As you can see, since we've been talking, not much has happened. Let's take a look at the hourly real quick. So on the hourly basis, what do we have here? Well, I think that short run, we have a nice little bounce. Do I expect any major rally? No. I think we're trading here now at what, $1.2235. Expect maybe a little bit of an inching higher trade for the next couple hours up to $1.22.5. I would not expect much more than that, and be quite careful because we're making lower move highs and lower move lows. It's very likely that we could see another sell-off in the euro down to $1.2217, bring it down towards $1.22 even. So remember, there's oil numbers that are just coming out right now or about to come out. We'll see how these things shake up the market, and then we'll see how things end today, and then try and figure out what's going to happen in the future. So once again, if you haven't subscribed to Forex Trading Unlocked on YouTube or Twitch, please do so. Check out the book High Probable Japanese Candlestick Patterns, written by yours truly, Teddy Keckstead. It's available on Amazon.com in paperback and Kindle versions. And whether you have your own system already or you're looking to incorporate new trading ideas, this book is very helpful. These patterns are very, very successful in all markets. They work fantastic. You just have to have the discipline to apply them properly, which I highlight in the book very clearly. So check it out. It's on Kindle and paperback versions. And also don't forget to go to www.forex-trading-unlock.com to stay in touch with us and get your Forex analysis and information. With that, you have a great trading day and also a good holiday weekend ahead.